Hello, 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 everyone. Hope everyone had a good trading day and is ready for the weekend. Another week wrapped up. This is going to be a shorter live stream. I'm sort of feeling a little under the weather. I get migraine headaches, and I have one this afternoon. So, going to be a shorter live stream, but did not want to not do the market overview while things were still fresh in my mind. So, hey, John. Hello, George. Hello, Patrick. Oh, there we go. Hello, Patrick. All right. By the way, if you are new here and don't mind me being a little under the weather, please still consider subscribing, ringing that bell, and hitting the like button. Longer term viewers, please come back, leave me some comments, and like the videos when you have a chance. So, hey, Dan Jet, thank you everybody who is here. Michigan consumer sentiment. By the way, let me switch cameras. There we go. There we go. I gotta adjust that one a bit. Hold on. Let me fix the. Why are we getting a little? There we Don't want to disappear me. I'll reset that camera. It's a little fuzzy right now. Sorry about that. Bob is not here. Bob's mainly on Tuesdays and Thursday afternoons, or if there's something major in the morning. Uh, let's see. Not sure if Bob is here, but I have a question on ticker UNG. Non-financial advice is a good play right now with the 10-day old in the EU and or Germany. We can take a look at that. Good afternoon, Connor. So let me just review some stuff. Michigan consumer sentiment preliminary numbers came in better than expected. Remember, the final numbers are last week, but everybody's watching the 5-year inflation expectations. Remember, last one was actually revised lower, but then that was one that Powell was in the watching, and now it's down to 2.8%, and that's 5 years out. But again, hey, the street, we're back to just the 75 basis point hike, and the street is in rally mode. So you don't look, I mean, look at this. Look, you want to talk, even the banks, even the ones that missed on earnings were just bought up like no tomorrow. Citibank up 13%. I mean, it was just buy everything today. And we had cycles turning up. We had that double that triggered and ran up in the NASDAQ with cycles turning up. We had the aggressive buy yesterday in the S&P, so you just got to keep riding it higher. I forgot to refresh this. If it does refresh now that I started a live stream, sometimes it doesn't. It gets caught. Okay, here we go. Let's just see where it finished the day. Again, 70% of the 75 basis point, and that's like being celebrated as dovish. And we'll have to see where this finished, but we rallied today with negative gamma, and it just kept everything going up with options expiration. By the way, we already talked about the banks that missed earnings today. Citi was the only one that beat, but everything tended to rally. Next week we do have more banks like Goldman. Well, we have Goldman Sachs, we have Bank of America, we have Schwab coming in on Monday. Then we start with some interesting ones from a tech perspective, like Netflix. You have Johnson Johnson from the healthcare perspective. Lockheed Martin. You got Tesla next Wednesday. So it's going to be interesting. Snapchat on Thursday. Well, Snap and American Airlines. American Express on Friday, which will be interesting to see if their consumer default rates going up or not. And then it really starts kicking in the following week when you got Microsoft, Alphabet. What else do we have? Facebook or Meta. We got Qualcomm. So we got Amazon, Apple. So that's going to be the big week. So I'm going to keep an eye on that. Again, here's your big rally up. Good day, Davey. Yo, Lauren. Good evening, Anissa. Like I mentioned to the people who are on here earlier, it's going to be a shorter live stream. I'm a little under the weather with a migraine, but I wanted to keep everybody appraised. Remember, we got that aggressive buy on the 4-hour yesterday with the S&P, followed through today. Now we have the aggressive buy on the daily So, and we closed above the 62.5. So now I'm more aggressively looking for pullbacks to be bought and going to immediately target between the 87.5 to 100 area, and then through that, and that will be to raise some stops. And through that, I'm watching for this 39.50 area, this spike high back from the end of June with the declining 50. So those are my intermediate targets. You see cycles turning up on the daily and on the weekly, still at the top without the rollover. What would be the rollover when the little red line, let me expand this here. Yeah, there we go, a little. I wish it was easier to do some of this. Now I'm going to have to correct it. Oh, but when you see this line, when you start seeing the red line get below the green line, that's for the rollover play on the weekly. So that's where we sit with that. And looking like it's going to re-hit the weekly rotation zone. And then if we get through that 50 and above the 8 on the weekly rotation zone, I'm going to watch for that bigger pullback, the bigger rally into the weekly rotation zone before the next rollover play. So I think it's I don't understand what you mean crap rally. You don't have to agree with the rally, but it was actually a strong rally off of buy signals like the NASDAQ. We talked, and that gave another great entry off the open if you were playing this on the shorter term basis. Because once we got the momentum above here, look, off the open, the little spike down into the 15-minute rotation zone. And if you look at the 5-minute right here, little spike down and then rotating up, and then it was just a slow grind higher, it closing in on the first target right there, closing above on the NASDAQ, the 62.5. Also, the NASDAQ cycles turning up and a percent B buy signal. So we have multiple buy signals going on. We have cycles turning up on the daily. We don't have cycles yet rolled over on the weekly. So we could easily see. Sorry, I'm jumping around a little too much. We're stalling out. Strong week just below the weekly rotation zone, so we could easily have some more upside play in this rally, even on pullbacks. So that's the play. The next, again, close above the 62.5. And then the next targets, not only for the double, but you see here the 87.5 harmonic with the close above the 62 virtually matches the target with the double, about 12,114, 12,115 area. Then the next target on the double comes right before the 100% level, and that was the lower probability. But now, since we have that close above the 62.5, that's the next target with reconnecting with the 50. So, yeah, you got to trade. Does this mean I'm not long-term bearish? No, long-term very bearish still. But you can have great rallies within a bear market. And I just look at it as opportunities to reset up short positions at much better levels. So that's what's fantastic. And if it kept rallying and it triggered a long-term buy, then it would. But there's nowhere near triggering a long-term buy. So keep that in mind. Just before I get to there, you also have the Qs. QQQ. If I could type, sorry about that. The Qs closing in right in front of that first target right there. Close above the 62.5. So same stuff with the Qs. Continued follow through next week. The Dow closing above the 62.5. I didn't know if that was going to make it intraday. Look at the stall out pattern there. Could not get until the very end, and the markets are still open for 15 more minutes, but that looks like it's going to close above the 62.5. So then the targets, I'd really be watching this first target about 31,650 area with the declining 50 period. So that's going to be my first key target to the upside for next week. Russell looks like it's closing. Again, this isn't fully closed yet, but look at that 62.5. Sitting right there. Again, cycles turning up. So I don't have to review all these like ad nauseum because you have so many things. The DAX, the doing an aggressive percent B buy signal today, which could be a front run to possibly trigger the double bottom. But it would definitely be raising stops as it gets this area. Also, this closing above. Let me reverse these harmonics just right here so you can see on this last leg down, also closing above the 62.5. So that also favors the 12,930 to 13,000 area with the rotation zone, top of the rotation zone right in the middle. Crude, again, we had that double trigger, and then you got Biden over. I mean, not double. I mean, head and shoulders trigger. Stalling out at the 25% harmonic, but still watching for pullback plays and a rotation higher. Nowhere near anything with stop levels on that. So that's going to be another one. The only concern with that is on the 4-hour cycles at the top, but daily's trying to turn up. We might get the first reaction with the rotation zone, a little pullback, and then the continuation play higher. Yeah, there might be some good entry spots. You know, you still have Sunday night and Monday, but we got to play the probabilities higher. So that's where you got to learn to analyze the markets and then trade with the short-term patterns within a long-term context. I am bullish for at least the beginning of next week. There is nothing. We have this probabilities, very strong probabilities with us. Again, let me just review. We got people joining a little later. We've got a percent B buy on the NASDAQ, the double on the NASDAQ. We've got the close on the daily above the 62.5, which then favors a return to this high zone. Now, because you have all that, let me reiterate something. It means we have over 70% probabilities of higher prices, at least to run up with all this, with the various things. Is that a guarantee? No. All right? Because it's probabilities. You still have just under a 30% probability that something else could happen. But I have to trade with the probabilities. So remember, nothing's guaranteed, and because that's why you always manage the risk. As I talked about yesterday, you always manage risk first and then let the reward take care of itself. So yes, I am bullish on the stock indices. I'm still minorly bullish on crude with the upside, watching for a continued little pullback with this close in the dollar index, a little pullback. Is this a major top yet? Not. There's no major topping pattern, but this is a pullback with the cycles at the top and coming out a major overbought. So I'm watching that. The VIX, we finally had a big pullback move coming back down with this 200 area. So I'm going to be paying close attention to see if we break below this 2374, 75 area next week. Because if we do, then that could easily sustain a longer rally, and we'd target these lower areas. What else? You got that little bounce on the euro. So Bitcoin, again, nothing's changed with that. A little follow-through play, but can't get more bullish on that until 21,866 on a closing basis. Where else do we sit? Notes, pretty much not an inside day, but still in consolidation. Still watching for that really move above 118.30, or breakdown would have to be below 117.17 at this point. What are your thoughts on the weekly chart on XLF? You have it's a weekly short-term double. It's sloppy on the daily with it's not being with these extra rotations in there. But if this were to continue higher, you have the weekly rotation zone against it. So can't get overly bullish until we get above 32.87. Okay, it was just buy everything, including bad earnings in financials. So, you know, we still have weekly cycles not at the top. Daily site, you're against this harmonic area. Let me just update this real quick. closing right above there. Is there a play? This was an aggressive buy entry, so we could see some follow through. My major resistance is about 32.27 on that, and before I can even play it for the higher, I'd need a close on a weekly basis above 32.87. What is that? 720 clear target hit? Magoo, huh? You're confusing me, Lauren. Uh, yeah, we got the OPEX out of the way. Google. Google's for me. I just saw it in here. It's still caught in this pattern right here, watching for cycles to turn up. Though, if we do rally at least into some of these tech earnings, I'm watching the upper end of this little flag pattern before the next rollover play. Tesla. Oh, oops, I didn't want to switch that one there. Let's go back over here. Tesla, you gotta, with everything going on, I'm actually surprised it held up this well. It held up with the rally in the NASDAQ, but this is weak because it only managed 74 basis point gain versus the NASDAQ and the S&P up 180 to 190. Watching now, I mean, if we continue to rally through next week and you got Tesla earnings on Wednesday, the next key area I'm paying attention to is about 750 to 752. If it breaks down below 708, then I'm playing it to 687, a close below 687, then I favor the lows. Oh, and overall, long term, just to reiterate for newer people, I'm still bearish. Even on a rally, if it managed to get to 792, would be a potential rollover play, and weekly cycles are at the top but not yet rolling over. So you could get a little pop into earnings and then the play. No, liquidity was not better. Liquidity, it wasn't like the vacuum, but the liquidity was not good. That's why I'm also taking the rally with a grain of salt, but things can keep rallying in a bear market, especially when the market shrugs off bad news and just earnings don't matter. Let's just still buy it anyways. Let's just buy it. Then you got to go with the price action. And that's what we're into, shrugging off any bad news, shrugging off bad earnings, and it's in rally mode. Is it a great buy that week or not yet? Again, back to Google. If you're going to have the split, you're going to naturally have people buy it. There's no super great pattern here, though. It's in a flag pattern within a longer term bearish trend. So overall, I'm watching for short plays up at key levels. What would be now, even if it gapped down with the split and then the split and then you get the move back up, there could be plays for the gap fill and then higher going into their earnings. Remember, their earnings aren't until right here, the 26th. So there's plenty of times for short-term plays, but the long-term play is still bearish. The intermediate term play, there's not much. If you get above this 22.71, and I'm talking of course, the pre-split price, I would then start watching with the cycles at the bottom for a retest of this channel flag pattern. Thank you, you too, Josh. I know we're nowhere near the bottom, but I'm seeing people say that the bear market will end when the indices have weekly close over the 200-day moving average. Do you agree? No. If I got a long-term buy before that, but the 200 is the 200. How much would we have to rally from here to even get close to that? I'd probably get a longer, at least a medium term buy signal, but that's another 13% rally from here. Could it happen? Yeah, but that's not a magic signal. Wow, you'd have to completely ignore all Q2 earnings too. So that would be, again, people are just looking still for a reason to buy anything. We're still at that buy mode, buy mode, buy mode. Let's see where it would be for the NASDAQ. Have to rally from here 19%. The Dow's only about 9% from here. So, okay, UNG. The earnings are generally more important than CPI because the earnings, not only earnings, but guidance. Because when more and more companies miss or guide lower, it's it affects the market day after day after day. CPI is one figure, and people are just baking in already that we've hit or we're close to hitting high the peak in the CPI, so any print should be better. But what's not being discounted is even if you drop from 9 to 8, it's still horrible. Even if you drop from 9 to 6, it's still horrible. It's nowhere near a 2% target. But overall, right now, going into a major earnings cycle with where you could start seeing earnings compression, earnings are more important. UNG. There's your UNG setup. Triggered back on the 13th, pausing sideways at the neckline, and then continuing up 24.91, 26.09. I'd just make it 26, and 27.28. Would not ignore that final target with that breakdown zone right there. So that's UNG. Your stop, well, your current invalidating of the pattern, because you, again, as we talked about yesterday, always know where your stop is, would be on a closing basis below 2008, a spike through 1951. There's, for the people who know the failsafe trend line, would not use it on this one because it's just way too steep, but that's going to give you an idea if you get a close below there. Once you hit this 24.91 target, you're going to want to raise the retracements, and then you're going to want to update the stop levels. But really, for me, if you start getting back below the rotation zone, I'd be, with the way natural gas is right now, I'd be using it as an earlier stop level. So there is your UNG. Just be wary with, let's see something here. Cycles on the top on the daily, so you could get a pullback play, but turning up on the weekly, so would not be surprised to see a little pause at some point. Might hit this first target before the pause, then get the pullback, then you're going to want to watch for a resumption move. You're welcome, John. You are welcome, Anissa. So that could also be, you know, natural gas. You have it here. You had it. I didn't mark up this chart. Come on, don't pause out on me. It's was a little sloppier with the futures, but you can roughly do the same just for those people who trade the futures. This was the shoulder. probably see it a little clearer on the daily, even though it's just a single bar pullback shoulder and you can't map it out there easily. So let me just make this viewable because I know we also have future traders in here. There you go. So now you can see it on that daily. Got to learn to spot even these little patterns, but then you're going to have to mark it out on the 4 hour because it's easier. And your futures would be, get back to that 4 hour because we want to be as exact as possible. Whoa, hold on. That should have been up here. There we go. That's better. I'm like, those targets weren't right. So here are your targets on this. You're looking at 73, 738, 774, and 814 on the targets. And I'd actually bump down this final target being right in front of that 62.5 retracement zone. So there we go. That should give people something to think about until we come back Sunday afternoon, 3 p.m. Central Time, to really start with our market prep. I will get out a sector review at some point this weekend, so keep your eyes out for that. And with that, sorry for the little shorter session, but I hope you can go back, mark up your charts. Hope you learned something in learning to spot some of these other patterns. And I'll talk to everyone in a couple days. Have a great weekend. Bye for now. Could you make a note to explain the forward curve to us at some point? Why don't you have Bob? Bob's really good with forward curves, so why don't you have that? Why don't you ask that? That's a good question for Bob on Tuesday, Sterling. He'll give you a really good explanation on that. If he won't, I will then at some point, just not today. Thank you again. I'll talk to everyone later. Bye for now.